Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
We still have these triggers of headline risk. There's no question about that. But we also have breadth that has expanded very nicely. So for my intermarket assessment, which I have stayed on, as long as the breadth is continuing to expand, that's a sign of strength. And right before I came back, I think I looked into the market. Yes. And I could see underneath the 6 days of panic buying underneath the surface. So as soon as the truce hit, we definitely got very strong buying underneath the surface. And I'm talking about the truce, Iran, Israel. So another thing that has been very helpful is credit spreads. I talked about this as well. As long as they're falling, it's very supportive to equities. And I will show you that chart. And as long as VIX is falling, it's very supportive to equities as well. So this is high yield OAS. This is when I warned that this was about ready to spike higher, and we had that fall from February into April. This moved over 200 basis points. We're right back down into the level where we broke out higher. That's credit spreads. As they're falling, it's very supportive for equities. This is the volatility. Well, I don't have to show you a VIX chart, but my point is, obviously, it has fallen into the July seasonal low. And this is something we're going to talk about because I can see Rish is asking a question about, what about hedges? So this is something.
What are these hedges? What are you mean the things that you trim in your garden?
No, I mean,
those are important.
The ones that the hedges only cost money. So, but they are important nonetheless. You know this. We're getting into July seasonality lows for VIX. This is when folks will start to come in, and you will start to see September and October get loaded with protection.
We quietly see the VIX start to march up. People are sort of sunning themselves, and the next thing they know, the VIX is starting to make its usual seasonal march up.
And what was my level before I said I did not see any volatility before? What was the number?
15 and a half.
1550. We're almost there. We tagged 15 just today. We went just below it, then popped right back up. I still see it. So, Rish, it's a really good time to hedge once we hit that level. Does not mean we're not going to melt up, though. So this is the problem. We can actually ignore the seasonally strong VIX issue if we have this melt up thesis kick in. And right now, unless we come back and break 61.47 and stay below, which is our breakout of the prior high, then unfortunately, full speed ahead. And why I say unfortunately is because it's much better to back and fill. Boring is profitable. When you have a melt up scenario, it only creates instability. It only creates a much higher probability of a massive blow off top. So, yeah.
That's the interesting thing. I have to say, I maybe got it just a little bit wrong just in the last week or so. I mean, I still believe in the sort of slow melt up, but I thought maybe the VIX would kind of hang in there because what I started to see was some, particularly in single name, some of those shorter term option pricing measures kind of start to push up a little bit because we sort of went from 600 to 625 fairly quickly. And it was starting to play out as one of these things that we've seen a number of times since last July, August, which has been this sort of spot up, vol up. And so I think it's always interesting to revisit for folks who are interested in volatility. And of course, options trading, because if you're an options trader, you are a volatility trader, you are a sentiment trader, you are trading fear, greed, and everything in between. So you want to know about this stuff. It is important. So what we see sometimes is when stocks in particular start to get parabolic, and it could be anything. It used to be just the MSTRs, but it has become in the last year, we've seen it happen even in very big companies where the stock just relentlessly goes up and eventually option pricing says, hold on a sec. I don't know where this is going to end. Is this going to end up being a ridiculous parabola? And then it starts to think, well, the higher they go, the harder they can fall potentially. So what option markets start to do is they say, well, we're going to just step back and start charging a whole lot more for this potential powder keg of parabolas or retests because of a parabola. And so it kind of stands in there. And I said, well, listen, we're going to probably stay up here until the market pulls back. If the SPY pulls back to 615, 616, then we'll see volatility relax. And that's what's happened. So I wasn't wrong for very long. That's exactly what I said would happen. As soon as that's what happens. You get market up, vol up, which is weird, right? Because when the market goes up, VIX is supposed to go down, but not when things get a little too exuberant. That's when vol markets go, hold on, what's going on here?
Have you noticed the past few days, because I'm running the trading room again, VIX has been down and SPY has been down. Or we had a little bit of spot up, vol up too. But it's like, anyway, it does not mean 1550, by the way, is the low. 1550 is simply my technical analysis on VIX of where we were going to fall from that April to May to June. It didn't take place by June. And then I said, okay, let's do July. timing, it's not there yet. It does not mean we can't bust through that and go back into 14. It doesn't even mean we can't go down, and we had 10 long time ago, but it's less likely in my book anyway.
Exactly. And that's what happens, Samantha. So when the market is relatively relentless to the upside, whether it's a stock or an index, vol sort of stays up there. And then when you kind of find a level, what volatility says is it says, oh, you found a level, 625 or whatever the level is. Oh, you found a level where we found some sellers, we found some willingness to kind of step in the way. Then vol pulls back. So that's what you're seeing, is you're seeing a little pullback in the market slightly, as well as a drop in VIX, because from volatility's perspective, it says, we found a place of comfort where we can spend some time. And that's where people start hammering vol. They say, okay, parabolas are off the table, at least for a moment. Let's hammer vol for another week until we start getting close to some event, right? So we're getting these periods, which we've seen quite in a pronounced way over the last year, which is we get these pockets of options just getting absolutely hammered because people are saying, listen, nothing is going to happen for the next 10 days. And they're often right. But then we start repricing the next event. So it's feast or famine. It's very much, I was explaining this to somebody the other day, and I said, listen, I've been doing this since mid to late 90s. And I remember when you weren't able to take a breath in some periods. You would go 2 weeks with every single day being breakneck volatility. And that could go for months. It was exhausting. Now you get more volatility clustering, which is either all hell's breaking loose like April, or nothing's going on. You can't even get a downtick. And it's just these periods of feast or famine are very much being played by option sellers. So they're hammering options right now. That does not mean the VIX cannot rise from here. So it's a good call in the 15s. I think if any lower than that starts to get a little bit too cheap, because yes, we're going into slower, hot summer months, but we start to approach that seasonal period. We start to approach some of these Trump dates. We start to approach other things that could potentially rattle markets, break the currencies. I mean, the yields are behaving, which I think is helping right now.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.